What happened with the Bitcoin Cash split, and why did it turn out differently than the 2 other times that the network has been involved in a chain split? I live unbanked off of cryptocurrency, and I use Bitrefill extensively because it lets me pay with crypto at places that don't yet accept it directly. This one service, more than any other, helps me live on crypto, pay your prepaid phone bill, or buy gift cards to thousands of major retailers around the world, all with cryptocurrency, including for exact amounts so you don't have to buy more gift credit than you need for a specific purchase. You can use Bitrefill without an account, but if you get an account, you can earn rewards points, which translate to savings, and you can also hold a balance denominated in dollars or euros to protect yourself against market crashes. Go to bitrefill.com, click Create Account, and enter the referral code DCN, or follow the link in the description. For a few months now, Bitcoin Cash has been going through a divide in the community, which might result in a chain split. Although right now it's a little too early to call exactly how this will go down, since it won't go down until November 15th, it does appear that the Bitcoin ABC side has lost by a large margin. It does seem like the majority chain will be the Bitcoin Cash node chain, and we'll keep the Bitcoin Cash price ticker on exchanges, we'll keep the majority of services, we'll keep just about everything. Basically, the Bitcoin ABC team will be involved in a minority fork, a very small minority fork, if at all. I think this case is very fascinating and it deserves to be studied a little bit because it's turned out quite a bit differently than other major chain splits that have been involved with the Bitcoin forks. Most notably, that the founding or main development team is the one that not only lost, but also lost by a significant margin, if you want to call it that. But before we get into all that, let's kind of recap the whole situation. The very brief recap is Bitcoin ABC, the first development team behind the Bitcoin Cash fork of the Bitcoin network, instituted some policy called the IFP, or Infrastructure Funding Plan, which basically diverts part of the block reward of new coins created towards Bitcoin ABC, towards funding protocol development at the protocol level, actually. And this issue definitely divided the community with a whole lot of arguing and fighting and things like that, and a competing implementation, Bitcoin Cash node, being created, which now has received the vast majority of miner signaling. And so it's pretty much going to be the de facto main implementation of Bitcoin Cash in the future. But that short recap can only get you guys so far. I'm going to let you guys hear arguments from both major sides of this issue, one from Roger Ver, former CEO of Bitcoin.com, and one from Amaury Séchet, the lead developer of Bitcoin ABC. So first, here's Roger Ver's take on the issue.
So we should probably explain exactly what the infrastructure funding proposal is, because I think that's just a euphemism for what it actually is, right? So you can, call it universal healthcare. That sounds wonderful, but when you look at what universal healthcare actually is, it's just a euphemism for a bunch of people with guns threatening people with violence if they don't, do the healthcare system the way the people with the guns want it to be. And if you put it that way, universal healthcare doesn't sound so great after all. And so I think it's the same with the infrastructure funding plan. Well, who doesn't want infrastructure? Who doesn't want it to be funded? Well, how can you be opposed to the infrastructure funding plan? But if you look at what it actually is, it's part of the Coinbase reward that's been going on for almost 12 years now. Instead of it going to the miners, it's going to go to the ABC and Amaury Séchet, and they get to decide what they're going to do with it. That doesn't sound like such a wonderful thing. Like one developer or one group of developers get to decide, hey, we're going to alter the way Bitcoin has fundamentally worked for the last, well over a decade, to just basically enrich ourselves to 8% of the total block reward each block. I think that that's not nearly as palatable because of the historical track record of Bitcoin. Bitcoin never, ever, ever had anything like that. I think once you start tampering with the emission schedule and the block reward, you're a whole new coin at that point, right? So if you want some coin where part of the block reward goes to pay for infrastructure or developers or that sort of thing, you have a bunch to choose from, right? You have Dash, you have Z Cash, you have Zcoin, you have a bunch of others out there as well, and then you have a bunch of coins that were pre-mined to begin with a big reward. Bitcoin never had that. Bitcoin Cash never had that. Bitcoin SV never had that. This is a huge, huge, huge change to what Bitcoin ever has been. And at the moment, the group of developers that want to do that, ABC, they have a very, very small minority of the hash rate. There's a futures market that trades it. They have about 1/12 the price, so that the minority hash rate, the majority or minority price, and they're the ones that are making this huge drastic change to what Bitcoin has always been. So I don't think it's so much as a fork as it's just they're creating their own coin, forking off of the Bitcoin Cash blockchain. So that means all Bitcoin Cash holders will get an airdrop on November 15th, and then they can decide what they want to do with that airdrop. They can keep it, they can buy more of it, or they can sell it for more Ethereum to do DeFi stuff. They can sell it for more Dash. They can sell it for more Bitcoin Cash. They can do whatever they want. But I would be stunned if it winds up being the majority chain somehow, because it doesn't have the majority support. It's a super contentious thing. The big surprising thing here, like you mentioned, certain people within the community that you're surprised or came out in favor of this. The one that I'm the most surprised by, I think, is Vin Armani seems to be a big fan of this. But I think a lot of these people, they're like, oh, they see dollar signs and they want it. And then I guess there's a whole lot of truth to that old adage that, always accuse an enemy is too strong of a word, but always accuse your opponent of doing exactly what you're doing. And so there's been a big meme war on social media and whatnot, and calling all the people that don't want the IFP, who don't want to change the coin issuance of Bitcoin Cash, they're calling them Bitsheviks, which I guess is a reference to socialism and communism and that sort of thing. But if you look at it, that's exactly what the IFP supporters are doing. They're claiming, hey, we're doing a whole bunch of work and you guys don't want to pay us for our work, so we're just plain going to take it. That's what governments do. They say, oh, we built roads and we built schools and we built an army. You're going to pay us whether or not you wanted those things or not. And that's exactly what the ABC crew are doing. They're saying, hey, we built full node software and you're going to pay us whether you want to or not. You're going to pay for it right out of the block reward. And so I think if anybody's, akin to communism, that sort of thing, this whole thing, or if anybody's the real Bitshevik, it would be the IFP supporters, because they're doing exactly what governments do. They're building something and then charging people for it, whether or not they want to pay for it or not. And whereas the people opposed to the IFP, they're like, hey, we just want Bitcoin Cash and Bitcoin to continue how it's always been, where the block rewards go to the miners and then the miners decide what to do with it from there.
Yeah, so that's a great rundown of where the situation is today. I've heard
your question was how did it get started? Sorry.
Well, that's a good recap of exactly where we are today for people who have not been paying attention and they understand exactly what's going on right now. But this idea of the IFP it's been around for a little bit longer. An idea of repurposing the block reward for development, which in a way, donations to developers is a very roundabout kind of way of that, because people get the block reward goes to miners, either the miners or people who buy it from the miners end up with it. And then if they give it to, it's still kind of the same way, except it's just shortening that path. And so what was the first IFP iteration of the idea?
I don't really know. Maybe it was Dash, to be honest, because it's existed on other coins for a long time before it ever was being discussed within Bitcoin Cash.
So I'm talking about Bitcoin Cash specifically. So when was the first IFP idea on there?
So the first time I became aware of it is there was some talk about how if you divert part of the Coinbase reward to this infrastructure funding plan, it doesn't just divert from the Bitcoin Cash miners. It diverts from all the SHA-256 miners, so BTC, BCH, and BSV. And because BCH only has a couple of percent of the total global hash rate for SHA-256, that means that BCH miners would only pay a couple percent of the total amount of the IFP stuff. So
how does that even work? How do you, not to use the word steal, but steal? How do you siphon off money from other chains? Yeah. How do you siphon off money from other chains? Like, is that because the same miners are mining the other chains and then they would voluntarily donate some of that stuff?
Yeah, so voluntary and coerced is kind of blurry in all of this here, but the way it works is that all the people that have whatever Bitmain mining hardware or whatever, they can mine BSV, BCH, or BTC, and they can hop back and forth, and most of them do, and they hop to whatever one's the most profitable at the moment, and they mine that one. And so if you make Bitcoin Cash less profitable to mine by not giving the miners 8% of the block reward, that means part of the hash rate that normally would have been mining BCH will just switch to mining BTC or BSV. And so if it switches to mining BTC, that means BTC is now slightly more difficult to mine than it otherwise would have been. And BCH is slightly easier to mine than it would have otherwise been. So you're basically sucking the revenue from the entire pool of SHA-256 miners. And so that part kind of seemed interesting. Like, hey, we can get BTC miners to subsidize the development of Bitcoin Cash. But the big problem is who gets to decide who gets that Bitcoin Cash? Like, should it be Amaury? Should it be Bitcoin.com, who arguably has done more to spread Bitcoin Cash adoption than ABC or any other business out there? And I think it's kind of like a Lord of the Rings scenario, which I haven't seen Lord of the Rings, but I've seen people talk about enough. I guess there's a magic ring, and the magic ring has magic powers, but as soon as someone gets the magic ring, they go crazy with it, and you have to destroy the ring. Otherwise, it's going to make everybody fight. And I think that's exactly what's happened with IFP here, is it's this really powerful tool that could be used to pay for a lot of really interesting things. The problem is there's no way to decide what it gets to pay for or who gets to, get paid for what, and it just caused a whole bunch of infighting and a giant fracturing of the community. So I think it just at this point seems to be too dangerous of a tool for Bitcoin Cash to have. And if you're a big fan of the block reward paying for developers, you know more about Dash than just about anybody out there. I think Dash is willing and eager to have that sort of thing. And I bought Dash years and years ago. I have a number of master nodes. There's no problem with that, but that was in the social contract from day one with Dash. This has never been in the social contract with Bitcoin Cash or the Bitcoin Cash ethos, and now it's trying to be imposed after Bitcoin Cash has been around for over a decade.
So. Yeah. So for a slight clarification on the Dash thing, as much as I would have loved for it to be in day one, it wasn't exactly. And the Dash history, and this is one of those things where I love digging deep into the history of things because you see kind of where things came from, and for example, when in Bitcoin way back in the day had that crazy inflation bug that, I forget what it was called, but people don't even know that. They think it was perfect since day one, or there's some new evidence that Satoshi or whoever may have what they call fast mined Bitcoin, is in running an optimized miner that he did not release to the general public and stuff. And then and I love things like that because it damages the mythos of this is something holy and
conception of Bitcoin.
Yeah, it damages the mythos of all this, and you get to sort of focus on what actually matters, what works. Is the technology any good? Who cares who founded it, kind of thing. And so the Dash started as Xcoin, which is literally just like a Litecoin fork that was using an X11 hashing algorithm. That was kind of its big innovation. And then there were some bugs, and they fixed that. And then when it turned into Darkcoin, they were kind of figuring out how to do a more trustless coin join. And so they created masternodes for that. And there was a Dash Foundation for a while, and it didn't really work out. And it was until 2015, about a year in, that from my memory, again, people can fact check this, that they found a way to do a masternode vote for a block reward type thing. And so that's kind of how it came about. So there were a few miners and stuff, but it was a minor chain, right? There was not a lot of activity, not a lot of attention, and people just, I guess, agreed. I don't think it was very controversial, the whole treasury idea. I think it was pretty evolutionary. And part of that is that Dash has had in its history an evolutionary kind of mindset of we're going to make necessary changes to the core protocol we're going to tinker. We're going to make things a little bit better if we can. Whereas Bitcoin is much more, we got to stay we got to change as little as possible that we can get away with to just kind of, keep things going. And so that's the kind of interesting point of view, because wasn't ABC more or less the founding client of Bitcoin Cash? And this is where it gets really murky, because with most cryptocurrencies, I think there's one main implementation. The developers kind of do that. And with the various Bitcoins, there's a few of them, but at the end of the day, it seems like what gets implemented is what the dominant team kind of does, like Bitcoin Core. The Bitcoin Core team basically decides what happens. There's competing clients out there, but it doesn't really matter. And so it seems like ABC sort of is the founding development team, if that can even matter in a decentralized world, right? The founding development team of Bitcoin Cash. So
if I can interject briefly,
yes.
there. So Bitcoin ABC was the name of the client, and ABC stood for adjustable block size cap. But one half of that founding team, so there's Amaury Séchet, and then there's another anonymous person named Free Trader. Free Trader is the guy that is behind Bitcoin Cash node. And so basically one of the founders of Bitcoin Cash's original client is on ABC still, and the other is now Bitcoin Cash node. Of the miners that are out there that are mining Bitcoin Cash, about 50% are signaling for Bitcoin Cash node for Bitcoin Cash.
Yeah, I think it's 52. I checked a few minutes ago.
Yeah, I haven't checked yet this morning, but 0% as of yesterday were signaling for ABC. And then the other 50% or other 48% aren't signaling at all. So at this point, ABC is clearly not the dominant node implementation, even though they have been historically. But that changed pretty quickly with such a controversial change to what Bitcoin Cash is.
Yeah, so if we're going to go from like a kind of governance perspective type thing, if there's a lot of coins that have some kind of a agreed upon block reward split, and most of them, the best place to agree upon that is at the founding, right? It was like when you create it, so anyone who uses it implicitly agrees with that kind of those conditions. And so one could, like, let's just say ABC is the founding chain or the founding client in for whatever purposes. But then what if they had implemented an IFP with the split from BTC? Obviously, probably way fewer people would have actually jumped on board. But just from a who's right kind of a standpoint, if they had just jumped the gun, done it right away, everyone is like, look, if you're going to use this new cash style of Bitcoin, your part of it's going to go to fund the developers, so we don't have this kind of developer capture like we had before. That would have been like, would that have been fine in your book? Maybe not the coin that you would have most preferred to use, but that would have been like ethically fine.
Yeah, I think that would have been fine, but it would have made the coin a bit less interesting to me, I suppose. If they had done it, if they did that from day one of the BTC BCH split, that would have made it a lot more palatable. The bigger any project gets, the harder it is to make these changes like that. So, Bitcoin Cash is the third biggest cryptocurrency that's proof of work, right? So you have BTC, Ethereum, and then Bitcoin Cash is number 3. With Dash, I'm not sure where it is there, but maybe 30 or something. So it's a lot easier to still change things. And even Dash is big, right? So the smaller the coin is, the easier it is to make changes. Bitcoin Cash is the third biggest proof of work coin in the world. I think at this point, it's not something that you should be making major changes to the underlying economic code that made you have this passionate community, because the tech and the community are both incredibly important. Even if you have really cool tech, but you have a horrible toxic community, the tech's not going to be used by anybody. And so you have to have both. And like Amaury Séchet may be a fantastic developer, but he's a horrible community builder. And it's not meant to be in a personal attack on Amaury. It's just supposed to be a statement of fact. Like, you have to be nice and friendly to people. And Amaury doesn't have that. His skills lie in other areas in the world.
Yes. No matter which way, if you consider him the nicest person in the world or the meanest person in the world, he does seem to be a very kind of go for what he thinks is right kind of a thing, instead of get group consensus and see what the whole group thinks. He seems to be very, very bold, which kind of comes
good. We needed that for Bitcoin.
I mean, that created it, right? He did exactly, was like, well, I don't like how you're doing stuff, so I'm going to do this. If you guys like what we're doing, join. And it seems like
my understanding is that he was paid to do that by Jihan and some others as a contingency plan for if Bitcoin wasn't allowed to scale. So I don't know how much of that was Amaury wanting to on his own versus being paid to do that. I don't know. That's a question for Amaury to answer. Yeah. I think a combination of both would be my guess.
Now, here's the thing where it gets interesting. There's this council now that's announced with ABC or whatever happens. Of course, a lot of this could be a moot point because you could hit November. It could just be there's a hugely lopsided hash rate thing where it's like Bitcoin Cash node is like 82%, and there's like now people are actively signaling for ABC and it's like at most 10%. And it's just like at that point they might have just given up or something.
I think you're being overly optimistic for ABC, to be honest.
Well, we'll see. Again, I thought that SV wouldn't be anything, and here it still is, right?
I think SV had the better economic message of like a stable protocol for businesses to build on top of. That part is fantastic, and ABC has been the exact opposite of that. And it's been a big problem for businesses like Bitcoin.com trying to build on top of ABC. And so Bitcoin.com is focused mainly on Bitcoin Cash. If it's a problem for us, it's a giant headache for all these other businesses that aren't married to Bitcoin Cash. So all the the Coinbases and the different exchanges out there that just Bitcoin Cash for them is just one of dozens of coins. They don't want to deal with a bunch of drama. They don't want to deal with forking. They don't want to deal with hard forks every 6 months. They want it's stable and reliable, and they can set it up and get it working, and then for the most part, hopefully leave it alone. And BSV has done a great job at promoting that message. I don't know if that's in reality, but they've done a good job of promoting that message.
Now that we've heard that, let's hear Amaury Séchet's perspective.
Yeah, so from our perspective, it's very much the node software is charging for its services, right? Effectively, it's like so the main problem we're trying to solve is that there is not that much funding for infrastructure in general, and you have like second order effects that go with that, right? Because once you consider that, then you get to consider that the team that are working on the infrastructure actually don't have incentive that are very well aligned with the system, right? Like you want those people to have incentive of maximizing the utility and the value of the coin, but effectively we can see in the space a lot where situation where teams have different incentives, and so we want to solve that. And the most straightforward way to solve that is, like has been done on markets, like forever, you just charge for your services. And so the direction that we're going with Bitcoin ABC is that we are not charging anyone for using the software in general, except miners. If they want their blocks to be validated by our software, then they're going to have to pay a fee. And this is going to fund effectively the infrastructure that we're building. And I think the incentives are pretty well aligned, right? Because we want to maximize the value of the whole ecosystem so that we can maximize effectively the revenue that we have from that system.
Yeah. So where I've seen a lot of the kind of debate on this whole concept seems to be around a few things. First off is decision making, is in whose right is it to make the decision. Second is who's do we need to just fund one team, or should one team be deciding for these things? And then the other one is, do we need this? Is there enough development funding already out there? So let's start with the first one, which I think is the most kind of controversial, is when Bitcoin ABC. So Bitcoin ABC, I think it's fair to say, is the original Bitcoin Cash implementation, more or less. It's kind of what started it. And so if you're talking about something like, say, a Zcash or something that has a founder's reward built in, when you create the coin, you just say, okay, 20% of the block reward for the first 5 years or whatever it is goes to the development team. And this is just the way it is. If you want to mine on it, you want to be part of it, you know it full well what you're getting into. This is exactly what you know. And then, it's hard to really tell with these kinds of things, but I think it's worked out pretty well for Zcash. They seem to have had good development funding. They seem to have built a lot of cool tech. And they're not super high ranked and never have been, but on the markets, but it seems like, it seems like mission accomplished.
So yeah, I don't know, because they've done a lot of very groundbreaking tech. They're really a world-class team, and the coins has not launched. The coin is not very old, so the inflation is crazy high. I think it's still 40% a year or something like that. Yeah. So the fact that it's just not going, through the bottom of market cap is I think quite indicative that people are seeing value there. After a few halving, I fully expect Zcash to gain a few ranks.
Yeah, so that's, I think, the big dispute is no one had to decide what they would pay developers. It was kind of decided at the beginning, and there was no Zcash community or users or miners at all when the decision was made. And so they just got to agree by participating in Zcash, and no one had any ownership claim like, oh, I have all these coins, and then a decision's made that I disagree with, now I'm going to be angry, because there weren't any. And so it seems like if I were to draw a parallel with ABC, let's just say it's a founding development team, but now it's significantly later, like several years later.
Yeah.
And now there's a change, and the people were saying, hey, wait, I didn't sign up for this. I didn't agree to this at all, and I'm upset. And so, like, what do you think of that? How do you even resolve that issue?
Yeah, I think this is, I think this is not that big of a deal. And the reason is, like, those people explicitly choose to not be our customers. And so I don't really see a reason to serve them. That's, I mean, that's simple as that. Like, if you go to the sandwich shop near you and you're like, I want a sandwich, but I don't want to pay this, the guy from the sandwich shop is going to be like, all right, but, don't get a sandwich and that's it, go somewhere else. So that's where I'm at. Some people disagree with that plan, but it seems that those people disagree with any plan because we've put many different stuff on the table over the past 3 years, and none of them got like significant traction. And so at some point you get to look at what the market is saying, and what the market is saying is that those people are not our customers.
Yeah. Now, the one thing that makes it also a little bit more complicated is that there's a few different development teams that are involved in Bitcoin Cash. And this is where it's the decentralized nature kind of makes things a little bit trickier, because people were always saying that same thing with Bitcoin Core Team, that the Bitcoin Core Team was just the biggest team, but there's other development teams and stuff. But somehow everything they decided always worked for always ended up being implemented for the entire network. And so, I mean, as far as like, I do understand there's a value in having different implementations for, say decentralization purposes, if there's a bug in one or something. But it seems like there is still one team, one code base that kind of moves the project forward. And do you think there seems to be that argument right now that, well, they're not the only people. Bitcoin Unlimited is doing things. Bitcoin Cash Node is doing things. We don't need to pay these guys because the other guys are doing work. And so what happens, I guess, if, let's just, ignore the IFP idea, but what happens if you guys just say, if ABC says, well, we're just not getting paid and we can't live like this, so we're going to get regular day jobs and dissolve the project, and there's other implementations, and that's fine. What happens to Bitcoin Cash under that circumstance where ABC goes away and then there's other developers? Like, what happens to the actual code base moving forward?
I think it would be very chaotic because those people don't really agree on the path going forward. Actually, very interestingly, the Bitcoin Unlimited team, for instance, has never agreed on the concept that we should have a roadmap at all for BCH because they see that as collusion. So I don't know if they've changed their tune more recently or not, but that was, when we launched, that was their tune. So under those conditions, it's going to be total chaos. At some point, if you want that to work, you kind of need to have some kind of definition of what the project is, and it can be several things, right? It can be either, well, this is whatever the main implementation say it is, right? That's one option. It can also be, well, we have this roadmap and those general goals, on how to decide what is in the roadmap or not. And if you want to do those stuff, then good, you're part of the project. And if you want to do something else, then that's fine. You get to do something else. So that's another option. And you see open source software project with those two models pretty much everywhere. Like the first one is like Linus Torvald say what goes into the Linux kernel, right? And at the end, whatever Linus Torvald decide the Linux kernel, what direction the Linux kernel should go into, then that's what it is. And you have also projects like Subversion that are going to be like, here is our mission statement, and here is what the kind of roadmap that fit that mission statement. And then there is not really like one person that is in charge of the project, but you get people coming into the project on a regular basis, and they build a culture such as someone comes and they're like, oh, I think Subversion should have feature X because it's going to be so great because whatever reasons, right? Well, if it doesn't fit in the roadmap, people are gonna say, well, like that's fine. Maybe feature X is great, but this is not what we're trying to do, and this is not what subversion is. So this is effectively the two paths that you have. I don't see, like the right ecosystem within BCH for the path, like subversion-like path to take place. Because when people say having a roadmap is collusion, then that this is like
so strange.
Yeah, this is not gonna work. And so what happened is that in practice we fall back into option one, like always, except there is a lot of kicking and screaming going on with that. Because this is effectively not what people want, but by rejecting the alternatives as well, like by default, you fall back into that mode.
Yeah. So I have this, I guess, theory or observation that either someone decides or the project forks. And it's kind of that flow chart, if to infinity. So for example, with Bitcoin, with BTC, with Bitcoin, someone decided, in that case Blockstream probably, and then then everyone else, that got BTC has not forked since then. It has not split, and then the split goes to Bitcoin Cash, and then split off to SV. SV, who decides there, so they're not probably they're probably not going to split again. We'll see. And then now it's just like split until you have an idea of like what to do, and that even happened with Monero that I remember that. For a long time, they were relatively centered around Fluffy Pony and things like that. But at some point, there was a big disagreement, and then it splintered into a million different coins as well.
Yeah.
So that's the other thing is I have heard that of course, I just like keep an eye on the space, and I just see when people are complaining about stuff. If I see a few complaints, it's usually that there is something going on. It's not just isolated. And so I've seen a few complaints about developer funding over the past few years. However, I've also seen people say that there's plenty of money for developers. It's just that it's not necessarily for ABC, right? that people will be willing to donate to a project that they like, but they're not impressed with the roadmap or whatever. There's plenty of money available. It's just that it's not a problem that there's no money. It's just that it's not the people complaining about no money, let's just say, aren't doing a good enough job. So I've heard that line. What do you think of that?
So it's a bit of both. Like especially in the early days, it was more option two. Like there was a lot of money going around, but that money went mostly to projects that did not yield that much result. Like for instance, consider that Bitcoin Unlimited has about 100 of magnitude more funding than ABC has, for instance. But they have not succeeded at their original mission to increase the block size on BTC. They have delivered a lot of like low quality software that have caused many problems in production. And like since then, they didn't have that much of an impact, like even within the BCH ecosystem, they've been more of a source of drama than value added. So this is problem number one, right? Like, the resources have not been allocated very rationally. But the second stuff is that I think people who have that argument, especially over the past 2 years or so, really don't realize the kind of money that it takes to run those projects, because like people are saying that, like I saw some dude was claiming as some kind of victory to Vitalik Buterin like this week that recently various BCH projects raised together more than $1 million in USD, right? And to some people that may seem a lot of money, but especially if you say that to Vitalik, you get to realize how ridiculous you sound. Because if you look at how much money various Ethereum projects raised over the same period, like I don't even know to count that because there are way more, right? But certainly it's above 100 million, right? So there is like 2 orders of magnitude discrepancy here. And so literally, Ethereum can be 99% less efficient in how they use the money that they raise, and still would compete us, right? So So like you may make a bunch of claims that we have a better system and we are more efficient and we don't need as much resources, but to order of magnitude it's ridiculous. So like even Dash has like way more than this, even though it's like lower in terms of market cap and all of that.
Yeah.
But there's still way more money going into maintaining the infrastructure and all of that.
What I remember specifically from Dash is in the end of December of 2017, the monthly available budget was worth about 10 million USD. And I was at $1,600 coin. And so let's just say, at around $80, a little more than that, but let's just say $80 coin, it's probably, what is it? That would be $500,000 per month around. And so it's like, half of it about goes directly to development and other bits can be created, other things. And then over time, it just can compound. And so it's not a lot. That is not a lot of money compared to like big projects that can say raise hundreds of millions or whatever. It's hard to get, 100, like you could get.
No, yeah, but that's still like almost an order of magnitude more than what BCH is raising.
Exactly.
Yeah.
So it's as they call it, it's peanuts. That's what they say.
So I think those people who say, like there is not, there is money around, but it's not going to ABC because we don't like ABC for whatever reason. They don't have a realistic expectation of the kind of money that it takes to run this kind of project.
Yeah, it's so. I saw something about a council being formed in January to sort of, decide things. And I thought there's some interesting concepts in there. For example, proof of keys for major miners and major stakeholders. And obviously hasn't happened yet. So there's probably a lot to be decided from now until then. But do you have any idea of how that would work that would actually be a good governance council to decide what happens, as opposed to just like we invited people we like and then we'll tell them what we're going to do and then that's it? Like, do you have any ideas of how you'd structure that?
No, so this is not like we invite people we like. It's like we invite people that can prove that they are major actor in that ecosystem, right? And so that would be people who have a major number of coin and have held them over some amount of time. So that you cannot pull like some kind of trick by borrowing a ton of coin for like a week and participate and then get on it, right? So you want people that have a lot of coin and that have all those coins over some period of time, and miners obviously, right, because they are effectively building the chain. Because the main problem that we want to solve with that is that the noise to signal ratio is like very bad effectively. Like you have a bunch of people voicing a bunch of stuff, but it's almost impossible to know who matters and who does not matter, right? And this old technology provide us the tool to prove mathematically who matter and who does not matter, right? So we want to leverage that. As to what it's going to look like very specifically, we have a few ideas, but we also want to leave the room for those people to make decisions for themselves as well. So we don't want to impose everything on them, right? Like we want also to give them an opportunity to bring that stuff in different direction, right? And this is probably what this first council is going to be about for the most part. It's going to be deciding the details of how the whole stuff works.
Yeah, that's one thing that we're taught when we talk about different governance models and talk about who decides or who decides and how do they decide it is basically most of it. And we were talking about one of the things that people did not like about BTC is they wanted the ability to essentially fire Blockstream, fire the Blockstream funded developers, and get new people that can do a better job. And that didn't work out. Probably, the miners didn't really take action, I guess. But that's a huge long.
But I think this whole episode is very misunderstood because like the framework that people have in their mind when they go at it is bogus, right? Because they're like, we want to fire those people, but like, did they hire those people to begin with? And if not, then how do you expect that they can fire them, right? the reality is for BTC is that you add a few groups, the Blockstream being one of them, that funded most of the infrastructure work. And because they put like most of the resources required to fund the infrastructure work, they ended up having a large say in the direction in which this is going. And this is not a bug, like this is a feature. You shouldn't expect a bunch of people that yell on social media to have more influence than the people that are actually putting the resources to make stuff happen.
Yeah.
If people wanted to bring Bitcoin in a different direction, they should have hired developer, make them participate in the Bitcoin core software, like for the years that it takes for them to gain a position of influence, and then they have a position of influence. And this is what, like, you see that happening in open source software where there is like a big stake. One example I can take, I think, like a few years ago, there is a very interesting example that happened in the Linux kernel. So I don't know how familiar you are with that, or familiar your audiences with that. But a few years ago, there were a few vulnerabilities that were discovered in Intel CPUs, right? So in the hardware, not the bug in the software, but there were vulnerability found in the hardware. And so Intel started to write some patches to the Linux kernel to mitigate the impact of this vulnerability in their CPUs. And so the Linux kernel had to do like some extra stuff to prevent those vulnerability from being effective. And the way Intel made those patch impacted negatively all all CPUs, right? So it would make the Linux kernel a bit slower on Intel CPUs, but also on AMD and ARM and MIPS and whatever other CPU constructors. And you would expect Intel to do that, right? Like they don't really care about the Linux kernel performing very well on their competitors' product. Like this is not their problem, right? They want the Linux kernel to perform well on Intel CPUs, and they don't really care about the rest, right? But because AMD and ARM and MIPS and all those guys, they also are big contributors to the Linux kernel. They were able to say, whoa, like this is not cool. You guys have a problem in your CPU. We understand that you need to fix it, but you need to fix it in a way that doesn't impact negatively other CPUs. And effectively at the end, it escalated pretty high. And at the end, Linus Torvald, told Intel, you need to scratch everything you do, and you need to redo it from scratch, basically in a way that doesn't impact negatively other implementation. And Linus Torvald is able to do that because MIPS and ARM and those other guys, they also are, contributor of influence in the Linux kernel, right? Like if those guys were nowhere to be seen and Intel was providing 90% of the resources to build the Linux kernel, then you would fully expect Linus Torvald to say, well, we're merging that because, Intel is providing 90% of the resources, so we cannot tell them to fuck off, right?
Yes.
So you have like a balance of power that is happening there by having those different parties that are, like competitor on the market, but contribute to that project, and they keep each other in check. And that didn't happen in BTC, right? On one side, you had Chain.com Lab and Blockstream and a few other people that were putting up the resources to build it. And on the other side, you had a bunch of people yelling at them that they were not building the right stuff. And this, this just doesn't work. You don't get what you want this way.
So as they say, it's the golden rule. He who has the gold rules. Now, if you've been around the space for as long as I have, you might remember the whole SegWit2x issue of late 2017. Basically, the issue was a disagreement between on-chain scaling, making the block size bigger, and off-chain scaling, which included optimizations such as segregated witness or SegWit, and off-chain solutions such as the Lightning Network, etc. These two situations do resemble each other quite a bit, in that in both we have the founding lead, whatever you want to call it, the main developer group, proposing a couple of changes which are deemed very controversial and facing a fierce community resistance from a bunch of white paper originalists or people that say Bitcoin used to work this way. This is the way it's supposed to work. We shouldn't change anything big. Let's make it always peer-to-peer electronic cash, and let's avoid capture by a hostile main development team that's hostile to the main original vision. In those cases, it's almost exactly the same. It's either the Bitcoin core team wanting to both implement SegWit and not scale Bitcoin on an on-chain way where you can just send regular transactions cheaply and efficiently, and said that should be the secondary mission. It's changing Bitcoin in that way on the one hand, and then for Bitcoin ABC, it's changing it so that funding for development comes straight out of the block reward, among other things, of course. I'm just summarizing in a very small way. And on the other side of the equation are a lot of actually the same people in both disagreements. You have, of course, Roger Ver, who we've already heard from, and similar people who are interested in using Bitcoin Cash or Bitcoin, whichever one in this case, for peer-to-peer electronic cash to just spend, as well as the idea that this is a free open source technology that anyone can use, anyone can develop on, no one controls it. No one central party or group controls it. And that means resistance to the Bitcoin core team, or in this case, resistance to Bitcoin ABC just calling all the shots and collecting some money from the block reward. Now, if you remember what was going on at that time, at some point to break the stalemate, a group of businesses, mining pools, etc., all got together under what's called the New York Agreement to essentially activate SegWit, or segregated witness, as well as increase the block size. And even though it was supposed to be a compromise, it ended up being on the big blocker side of things, more or less. Again, don't come after me for simplifying things a little bit. But the point is, a huge amount of support was signaling for raising the block size and going against the Bitcoin core team. It was in, I believe, in the 90% or more. However, that didn't pan out. The Bitcoin core team got their way in the end, and Bitcoin followed their path. And with Bitcoin ABC and Bitcoin Cash, the opposite happened. It didn't really turn out that way. Now, why? On a recent episode of the Digital Cash Rundown, Collin Enstad came on and had some interesting perspectives on what exactly makes this situation different.
Well, SegWit 2x obviously happened like months after Bitcoin Cash was around. I don't forget the exact month, but Bitcoin Cash was created August 1st. Mm-hmm. And then I think the 2x signaling peaked in like November or something like that. It was a couple months later. Mm-hmm. And I mean, basically, there was no software release for 2x. Like there was no software to run for 2x. Mm-hmm. So the miners all wanted this, but there was nothing for them to actually to run.
Yeah.
And so that's a huge difference between now and then. And so as far as like relating back to current day, Bitcoin Cash node right now has like 75% of the signaling on Bitcoin Cash blocks. Bitcoin ABC just got a couple blocks signaling for them, like brand new as of like yesterday.
Yeah.
So they've had like 3 blocks so far. And so the difference is Bitcoin Cash node already has software that's being used. And yeah, it's a fork of ABC, but that makes it easy to drop into for people that have been running ABC to run Bitcoin Cash node now. And so I guess that's a huge difference. I don't think like it's valid to say that miner signaling means absolutely nothing, because like obviously it means something. They put it in there. They were not just going to put it in there for nothing.
Yeah.
So
now miner signaling clearly indicates miner intent. Now,
right.
What we don't necessarily know if it signifies or not is, does miner signaling equal a commitment to follow through and fork the coin on whatever? And so, for example, I think that was one of those issues with the SegWit 2x thing, is they loved the idea, but they didn't quite buy the technical implementation. They got scared, and then they went with the seasoned developers, right? And through all the shit talking about the Bitcoin core team, there's a reason why just about every single project out there backports still to Bitcoin core. Not because they like SegWit, not because they like their ideas or like their scaling type stuff, but because there's just a lot of people ironing out bugs and optimizing the code and stuff like that. And so there's that like,
right,
we're just going to stick with what's safe. And so is ABC the safe team? Like, do people, so Bitcoin Cash node, from my understanding right now, I guess, is like, it just forked Bitcoin ABC and hasn't yet done anything or had the opportunity to, in all fairness, right? Hasn't had the opportunity yet to show that they're competent developers.
I don't think that's completely true. Let me look at something quick. But as far as like ABC being the safe team, I mean, they just backport core. So
yeah,
like that's the majority of what they have been doing, and they'll even like admit it and then they'll say it's because they haven't had the proper funding, and we're back to square one, right? And so, as far as like them being the safe team, I guess people say that they've been doing a great job for Bitcoin Cash over the last 3 years, and I mean, I guess we've had a couple opcodes here and there. We got Schnorr before Core, but that was Mark Lundeberg, who wasn't even part of ABC. And so a majority of what ABC has been doing has been backporting. So as far as like them being the safe team, like I guess if you like backports, I think Cashnode wants to kind of go away from the backports a little bit and like actually like innovate. I know Jonathan Tuman just came out with something today, which is what I'm trying to find right now, about being like faster transaction propagation or something like that. And I know he's been doing a lot of stuff. I mean, he was the one that wrote the new difficulty adjustment algorithm that both ABC and Cashnode are going to be put in the assert one. And so like he's not part of ABC, and so I don't think you could really say ABC is like the safe one by any means. And then as far as like the Cashnode, that's always like a concern. Is like have these guys actually proved themselves? Have they proved themselves? And I guess that is a concern, like as far as like them not being established developers. But I mean, a lot of them have already contributed to ABC many times too, and they were like previous ABC contributors, and now they're on Bitcoin Cash Node. So you could say they have. I mean, and at first, Amaury wasn't really like a known developer in 2017 either. Before he made Bitcoin Cash. So
now, as we're exploring the issue of Nakamoto consensus, or how these decentralized mining-based cryptocurrencies come together and make decisions, or fail to make decisions, or split, or whatever, it's important to analyze the cases that are out there and see what works and what doesn't, or how it works, or whatever. Now, we have 3 big events to consider. The first one is the split off of BTC or Bitcoin. Now, it's comprised of 2 different elements, so it's a little bit murkier there because there's both Bitcoin Cash, which split off, as well as the SegWit2x, but they're both kind of the same zeitgeist, the same let's increase the block size even though the Bitcoin core team won't do it. So there's that one instance. And then the second one is the split off of Bitcoin SV from Bitcoin Cash, which is eerily similar to this today, right? We had Bitcoin ABC as the main implementation of Bitcoin Cash, wanting to do a few different changes to the protocol, and a bunch of white paper originalists. Again, we can argue all day whether or not Bitcoin SV represents the original vision of Bitcoin, but that was the zeitgeist behind it. We have that group of people saying, no, we don't want this. We're gonna fire ABC. We're gonna do all this stuff, and they ended up basically losing the hash war and becoming a minority chain, although much closer to the original minority chain. And then finally, we have ABC versus Bitcoin Cash Node. And ABC, the main development team, lost this one. So that's 2 out of 3 where the main development team won. Now, what can we learn from this? Well, let me put it pretty simply. Miners are expected to be stewards of the network. They're supposed to vote with their hash power on what code changes go through. And unfortunately, or fortunately, depending on your perspective, we found out that miners, especially when we're competing on the same mining algorithm, where they can just choose which chain to mine on, they don't have to completely change out their hardware or anything like that. Miners tend to be mercenaries. They tend to basically do work for whatever chain profits them the most. It's very simple. Now, this, of course, doesn't exclude individuals mining based on philosophy. It doesn't exclude certain companies making decisions that might not be in their immediate short-term economic self-interest, but it is what it is. It tends to shake out that miners follow the money, very simply. The other thing we can see from this is that miners tend to be risk-averse. It's already a pretty risky business putting all this capital and startup money into electricity, into equipment, et cetera, and have rewards vary based on who else is participating, and then the price can fluctuate, and then your business model is very up in the air. So miners tend to be risk averse. And this means that going against the core development team, the main developers that made this, going against the stable implementation tends to be a very risky move, and therefore miners try to shy away from it. So when analyzing these cases, we have two things to keep in mind: risk and potential profits. So when you're looking at the first Bitcoin split, a lot of miners, of course, sided with the Bitcoin core team. And for those two reasons, let's say. The Bitcoin core team has a long track record of optimizations, of creating stable code, of being inheritors of the actual originator of cryptocurrency, Satoshi Nakamoto, of being kind of that same group, that same inheritance, so to speak. And so it represents something very stable, that you're not going to be mining on something crazy that starts not working, that people leave. It's a known quantity, which is a definite must in a world of all this uncertainty from just the crazy mining business. And the second thing, profit, right? The bigger chain, the chain that has the most money associated with it, that the token is going to be worth more on, that's what they're going to largely pursue, of course, until it becomes too crowded, and then they might filter down to the other coins that have less hash rate and less competition, but also are worth a whole lot less. Overwhelmingly, miners have sided with Bitcoin of all the Bitcoin forks for those two reasons. Now we take the next case with the split off of Bitcoin SV. Most of the hash rate has remained with Bitcoin Cash of, again, the two minority forks. Because, again, Bitcoin ABC, seen as the stable development team, at least more so than, say, N-Chain or whatever else you want to call it. As the first, Bitcoin ABC was essentially the first team that started mining Bitcoin Cash specifically. It's basically the founding team of Bitcoin Cash. So as far as that several year history that's kept it together and kind of kept the value on the chain that has existed, you know, Bitcoin ABC, that's the one you don't want to anger. That's the one you don't want to run afoul of, to go experiment with some other group of developers that might not be as battle tested or whatever else you want to call it. And of course, more money, investment, valuation, etc. ends up with the Bitcoin Cash side rather than the much newer Bitcoin SV side. And so where do you think miners go? Profit and stability. Now that's where it becomes crucially different in this latest split. Bitcoin ABC, despite winning a hash war before, managed to overwhelmingly lose this one for a couple of big reasons. Any guesses? Stability and profit. As far as the stability thing, it's more of a negative than a positive stability we're talking about. It's not so much that you're going for the more stable implementation. It's you're going against a perceived instability. So there's a certain minimum threshold that once you can prove that you're going to be a stable implementation, that people that there is something viable running on this chain, then you can use it. Then all of a sudden you're not scared to use it. And so that's where the key difference is. With Bitcoin Cash node, it's a competing Bitcoin Cash implementation that, as Collin pointed out, exists today. People are running the nodes today. It works. It's not like this great, we're going to create this separate chain that's going to work this way, and we're going to trust us, the software is going to work, and it'll all be stable. It's like, no, it's stable today. You can choose between two stable parties, not just one. And so even though, of course, you'd rather go with the battle-tested one, the one that's been there since the beginning, the one where you trust the developers, etc., this other one works too, so there isn't that huge risk to jump to when you kind of switch to supporting the new kids on the block here. Second one, profit. Now, as far as you're talking about which one's going to be worth more, of course, it is worth noting that businesses such as Bitcoin.com, which is a large chunk of the Bitcoin Cash ecosystem, unequivocally sided with Bitcoin Cash node. But it goes deeper than that. You see, in the previous couple of forks we talked about, the differences between the team, the argued over changes, were about things other than profit. You have segregated witness and lack of scaling, which for the most part is just a philosophical technical argument. Now, of course, that does limit the amount of fees that can go through the network because of the volume. But first off, there was never a huge percentage of revenue for miners coming from fees to begin with. And second, it appears to be that fees are going up. Fees are doing well as a whole because Bitcoin fees are getting extremely expensive, even though you're limited to, a few 100,000 transactions a day. It's basically worth it enough, or at least it's hard to calculate to show, wow, we lost all this in revenue that we could have gotten from fees. And it's the same thing with the Bitcoin ABC versus Bitcoin SV. I can't honestly remember off the top of my head what the main driving differences were, the disagreements on protocol changes, but it basically had nothing to do in the very short term with profit. There was no, this is going to ruin our profits as miners, et cetera, et cetera. That is, however, the case with Bitcoin ABC. Bitcoin ABC was going to implement as they call it, dev tax, the infrastructure funding plan, basically reducing the amount of money that goes to miners, I believe by 8%. So there you have a concrete loss between the two systems, where if you just run Bitcoin Cash Node, you can get away with, a lot more money than you can with Bitcoin ABC. And so you have that profit motive, and of course you already have the lack of instability on the new one. And why would you not pick Bitcoin Cash Node at that point? It has nothing to do with philosophical arguments, probably. It has nothing to do with other factors. They're both semi-equal in that they both work, but this one costs a lot more. So, it makes it a lot easier. Now, I think these discussions are very important to have because cryptocurrency does have a lot of tribalist posturing. It has a lot of technical discussions. It has a lot of other things that can really distract from the way things actually work. And I think it's important to analyze all these situations and not just things happen and just sort of try to piece things together after the fact and come up with some sort of hand-wavy explanation these ideas won out or something. And I think it really helps to actually zero in on what makes people decide the things they do, because otherwise you can start running into all kinds of technical arguments that don't make sense to basically describe economic incentives and them playing out in the real world. So the next time there's this crypto political event that comes around and people start thinking this is going to win out or that's going to win out or this is how it's going to shake out, always think about that lens that miners especially want stability and they want profits. But the market does that too. The rest of us kind of want that too. Why do people use Bitcoin? Why? Just about every other coin out there is cheaper to transact. You can do more transactions and probably has some extra features and bells and whistles and things like that. Why would you pay exorbitant fees to do a basic function like send and receive on the Bitcoin network when you can do it anywhere else? Well, of course, here we go back to those two. Stability, profit. Bitcoin is stable. It has existed for well over a decade now, and transactions keep running. The core development team keeps on patching bugs, keeps on optimizing the code, etc., etc. It just works. It's not going away. It's the granddaddy of all cryptos. It works. It's stable. As stable as anything, one could say. And of course, the second thing, profit. Bitcoin has a pretty good track record of going up over a long period of time. I know plenty of other coins have gone up and down and might have had much greater returns during a certain period of time, but old BTC is all reliable, just keeps on going up. So Bitcoin remains stable and it keeps increasing in value over time. So even though there's other projects with lots of different bells and whistles, people will keep on going to this one. So I hope you found this discussion to be useful, especially examining why things happen. And I hope that you will be more informed about being able to figure out which way the crypto markets are going to blow next. Let me know in the comments if you really like this. And as always, subscribe. Don't forget to throw me a donation on Cointree if you like this. If you don't, you can still leave me a little donation with a message saying you don't like me. And yeah, I will see you guys next time.